All right, today I've got Faiq Mihlar and Ryan Beavers with me from Central Illinois Title. One of the things people have asked about is a 1031 exchange. And so I could do my best to try to explain it. I've done them before, but I just thought I would bring the experts in here. They're both attorneys, again, with the title company here. Central Illinois Title represents about 102 counties throughout the state of Illinois. So they've got a lot of experience with it. And so let's hear just what is a 1031 exchange.
Okay, let me start by saying under this Section 1031 of the United States Internal Revenue Code, a taxpayer can defer recognition of any capital gains that they may have accrued and related federal income taxes to any with a like kind exchange. If they, for example, if they sell a property and within a certain time frame they have to buy a similar property.
Gotcha.
Okay? And there are requirements to go through that, and Ryan will go through some of the requirements.
So would this be applied for like a homeowner or an investor more so?
So, no, not for the individual taxpayer. It would be for, it could be for the individual taxpayer, but more often than not for an investment property. So not your principal residence, but something that you've invested in and you're generating income on, or you're holding for the purpose of generating income.
Gotcha. So like a rental house, you've got a buyer who wants to buy it, but you don't want to pay the capital gains tax on it, so you go then find another house. So walk us through how that works.
So first you would go to a local title company or attorney who will likely act as the qualified intermediary. So they're the person that does the exchange without you touching the proceeds personally. Or your LLC, if you're able to do it that way. There are other rules related to business entities doing it. But you would go to the title company, you would close on a property, you would relinquish the property, the proceeds would be held in a separate account by the qualified intermediary. Then you would have 45 days to identify one property to put those proceeds into. And then after the 45-day period has told and on the 45th day you've identified the properties, then you have 180 days to close on those properties. Put the proceeds into a new investment property.
Okay. And so any property, and say I've got a rental house, I can go buy a piece of farm ground with that?
Yes, you can, as long as it's held for investment or
Okay.
held for the purpose of generating income.
Okay. So like kind, you mentioned that, doesn't have to be the same thing.
It doesn't have to be the same thing.
Home.
The only requirement is that it's like in that it generates income or
Gotcha.
it's held for investment.
Okay. And say I make $100,000 in the sale of a rental house. Do I have to go buy $100,000 like kind property, or how does that
No,
work?
so you can purchase several properties. You can purchase up to I believe it is 200% of the. Well, let me double check that before I say it. 200% of the value sold. Yes.
Okay, good deal.
So it can be partial. It doesn't have to be the whole thing. You can defer. Maybe if you only identified property worth $50,000, that's what you're going to be able to protect in terms of your tax deferment.
Gotcha.
Right?
And if it's actually less, then you do have to, what is called, I believe it's boot, where you receive those proceeds, the proceeds that you didn't use, but you do have to pay capital gains tax
On that
portion.
Gotcha. Okay. So oftentimes we'll get emails like, "Hey, there's this investor who's selling a bundle of properties. So could I, as an investor, sell off one of mine, put it in a 1031 exchange, and then identify that within that 45
Identify
days?
another property and
Yep.
put those proceeds from that transaction into another
Gotcha.
property held for investment.
And all this is doing is delaying that capital gains tax impact. Eventually,
Exactly.
if you sell everything.
So with the IRC's own words, it's deferring the capital gains
Gotcha.
now to pay later. However, there are estate planning benefits. So if you were to pass away, your children, assuming your estate plan is in order or you're holding assets not in any particular irrevocable trust, they're going to get a stepped-up basis. So whatever cost basis you had in the property, they're going to receive that. So then the taxes are ultimately deferred forever.
Okay, so let me elaborate on that because I just went through this recently where so throughout my lifetime maybe I'm buying and selling and raising that value, and then the very last thing I buy before I pass is farm ground.
Yes.
So then when I pass, my kids now inherit that farm ground, and at that value is what they're inheriting it, and they're not paying a capital gains tax at all.
Right. They get a stepped-up basis for the fair market value on the date of your death.
Okay.
And the advantage is also for when you differ, right? You have time value of money. I mean, if you have gained, let's say, 100,000 today, and you're able to get a property of that kind and hold on to it, right? And 10 years from now, the dollar is, deferred. So you are actually saving money even on time value of money by paying taxes later, and also the value of the dollar being less.
And that's a
Which I
policy
think is-
reason. So
yeah.
they want to encourage, the Internal Revenue Service wants to encourage investment. So by taking those proceeds and not paying taxes on them right now, I can put those into another investment, income generating property, and then it encourages
Sure.
investment in the market.
The key here is, Tony, I would tell anybody wanting to do this, is to make sure that they have the right experienced attorney who knows what they're doing, the right title company, and to follow the timelines as set forth by the code. Because if you mess that up, you don't get the benefits of it.
This
right?
is not something you literally can't do this on your own. You can't go get, because you have to have a qualified intermediary.
Exactly.
Yeah.
You have to have, and that money never touches, or let's say, for example, I sell the property and, Ryan is the buyer. The money never reaches the party that sold the property. The money comes into the qualified intermediary. In the case of our title company does offer those services. You will hold those funds, and then after you identify the property and close, those funds will be used to purchase the
To
next
buy the
property.
new one. Okay, gotcha. Where do you see this more in? People doing it for houses, apartments, farm ground? What's more common?
Commercial property,
Okay.
you will find that in farm transactions, right? Or anything that is investment bearing, right? Income bearing. For example, you can buy an apartment complex, you could have a strip mall, you could be investing in any other ground that you have bought and you're holding for capital gain in the future. It may not even generate current income. You hold the property for 10 years and the property has increased by 100% or 40%, whatever the percentage is. You're just holding property.
Gotcha.
And a lot of people, you can have the transaction where there's somebody that owns 10 rental properties and they're relinquishing those for one commercial property.
Okay.
Or if one of the benefits is that you can seek a property with a better return. So say you had a few rental properties, but now you're going to look at not a self-managed property, but maybe you're going to look at an apartment complex that's managed by Brinkotter, for example. Looking for a different property. So the Internal Revenue Service is encouraging investment. You're taking those funds, dumping it into something that's making you more money, or fits your lifestyle better. Maybe you're not looking to self-manage anymore. You're moving to something completely different. But it's a tool to switch investments without immediately incurring the problem of taxes.
I think this is really important, and I like the way you described it, because for me, I kind of always wondered, are we just kicking the can down the road with a 1031 exchange? Well, in some cases you would be, but the whole estate planning idea, if you've got an investor nearing retirement, why wouldn't they do a 1031 exchange? Unless they just need the cash now, I guess, right? But
I think that's the only non-benefit is the fact that
You don't touch
if you
it.
need the cash now, then you can get the cash now,
Yeah.
but you will be paying the
Sure.
capital gains tax.
Okay. No, that's good. I think this is very helpful. Again, this is not something anyone can do because you have to have a qualified intermediary. So this is something you really need to find a great team, just like most things in real estate. Find a great team of attorneys. Central Illinois Title here locally and throughout the state is very experienced with this, as you can hear here. Thanks guys for joining me today and explaining this with me, and hopefully we can do this again in the future.
Thank you for the opportunity.
Yep. Thanks guys.
Thanks, Doug.
Yep.